Good day and welcome to this short video just to introduce you to the statement of changes in equity. We are used to the financial statements including a statement of profit or loss and other comprehensive income and a statement of financial position as at a specific point in time. So these statements need to be linked to each other, and the main link would be the statement of changes in equity. So we are going to draw up a statement of changes in equity to portray, first of all, everything regarding the owner. So if the owner wants to determine their stake in the entity, they would have a look at the statement of changes in equity. We also have the notes to the financial statements if we need to explain any amount further that is included in either the statement of profit or loss or the statement of financial position. So the format of the statement of changes in equity, and it's again the heading for the year ended. So it's a continuous portrayal of changes in equity items. Because it's a sole proprietor, I would have one account for the owner, and that would be the capital account. So I'm going to show in this statement a reconciliation of the balance of the capital account as at the start of the year and as at the end of the year. So the 31st of December 2019 is my financial year end, and I want to show the users how the capital balance changed from the start to the end of the year. This can change with additional capital contributions by the owner, either cash or other assets, vehicles, or paying on behalf of the entity for inventory, any capital contributions. Because the owner can contribute, he or she can also take out, so we'll also have drawings. And then each financial year we will determine either a profit or a loss for the period, and this profit or loss belongs to the owner because of his or her capital contributions. So the statement of changes in equity will link the other financial statements in the following way. I would get the profit or loss for the period from the statement of profit or loss and other comprehensive income, while the balance at the end of the financial year will be transferred to the statement of financial position. So the statement of profit or loss for the year ended 31 December will end with the profit or loss for the period, and this is the amount that will be transferred over to the statement of changes in equity. While the statement of financial position is the basic accounting equation, so we have our assets and our equity and liabilities to be in balance. So I will take from the statement of changes in equity the closing balance of the capital account as at the end of the financial year. So just to recap, the statement of changes in equity is a reconciliation of the balance of the capital account from the start to the end of the year, and it's the link between the statement of profit or loss and the statement of financial position. I trust that you found this informative, so you can go over into doing exercises including the statement of changes in equity.